It's February 27, 12:23 p.m. We are looking at Apple, AAPL. So, the unusual options today was very interesting, and wanted to let my subscribers know that I saw something just less than an hour ago at 11:30 here. You'd see here on April the 21 options here. There is this 4,000 contracts. You'd also notice here right below it, same time, about that same time, another 3,000 contracts. So a total of 7,000 contracts that are same strikes, the 140 puts and the 140 calls, right? So we have to look at what is this? Is this a bearish, bullish position? You can kind of get some clues just by looking at the market values of what they paid and what they sold it at. And so it's more skewed. The call side is more skewed towards a sell, and the put is skewed more towards the buy side. You can notice that from that range. So this tells me, as well as the market at the minute chart at 11:30 right here. 11:30 is right here. As soon as that trade was put, it started to go down, right? So that's a bearish sentiment. It's telling me that this was a bearish sentiment. You can see it's kind of come up a little bit, but overall, it's still a bearish sentiment on that trade. People could just be buying it because they think it's a good price, but the unusual options, the hedge fund that put on this trade, 7,000 of these contracts, this was the trade. This was the trade. Right here, 140 and the 140 puts, 140 calls, right? Buying the 140 puts, selling the 140 calls. It's a short position, immediately starts to profit as it goes down. It's currently at 148. And you can take a look here on the options chain, here on the April 21s here. So you notice here that this is the 10th. There's currently 10,000 contracts that was placed today, the volume here. And you notice here it's 7,000. So there's actually more puts here. There's like 3,000 more. And I think it's because people were buying these puts, because it's a lot easier to buy puts or buy options for that matter than to sell options, because it costs, you need more buying power to sell options. And so a hedge fund has that ability to do that. And so that's another like evidence of that. And so if we calculate this, there was 7,000 contracts, and the buying power to put on a trade like this required $4,000 per contract. So this was $28 million buying power. And again, this is something hedge funds have, but not the typical retail trader. So whoever did this trade has some really good information that Apple will be going down by April 21, 53 days from now. So my analysis is that this is going to be going down and continue to go down sometime within 53. It might hit 149 again, but I don't think it's going to break 150. If it does, I could do a stop loss and cut my losses there, but I think the probability of it going down is a lot higher than it going up. So that's my take on this unusual options activity with $28 million of unusual options to back my prediction up. So if you like this video, subscribe, and you can get these instant notifications right away. So you can follow the smart money that hedge funds are making. Thank you, and you have a great day.